So in early stage innovation company, the investors classified into two groups. We've got the sophisticated investors who are roughly people with net worth of over $2.5 million, or have earned over, Paul, 250,000, I think, is it,
Yeah,
per
250,000. Yep.
per annum for the last 2 years, who get a certificate signed by their accountant to say that they have that. And I understand now that that certificate also now includes a clause which basically says that the recipient of this certificate also has the necessary knowledge to be able to make investment decisions, or words to that effect. And that's really to cover someone that goes out and wins lotto. Just because they've gone out and won $10 million doesn't mean that they understand all the intricacies of investing. If they're under the 2.5 million and under the sophisticated status, they're called retail investors. So a sophisticated investor receives a tax rebate of their investment of up to $200,000, calculated on 20% of their investment. So, in other words, if they invest $1 million into a company, which some people do, they would get $200,000 tax rebate, which they are able to deduct off their taxation bills. And if they can't use it up in the next 12 months, they just carry forward the balance until it's actually used up. If it's a retail investor, they still get 20%, but the maximum investment a retail investor can make in an early stage innovation company is $50,000. So their rebate finishes at $10,000. The $50,000 limit is the government's attempt to make sure people are diversifying their investments. They're not putting it all into one company. The government's view is if you're a sophisticated investor, you're big enough to look after yourself. And what that really means is normally those people have got external advisors who will make recommendations as to whether $1 million is put into one company or not. But the government is protecting, in inverted commas, the retail investors. But the other big benefit for that category is that, irrespective of your classification, sophisticated or retail, if you hold those shares for more than 12 months and less than 10 years, you don't pay capital gains tax when you sell those shares. So if you really have hit on to a winner and you're getting 20, 30, 40 times your investment back, it could be quite a bonanza not to have to pay capital gains tax in whatever future time. If you still own the shares in 10 years' time, the company is revalued at that date, and that becomes your new cost price for future capital gains tax calculation.
So that's an incredible incentive for somebody to invest in those early stage innovation companies. So if those incentives exist, as a business owner doing research and development, undertaking research and development, there's I guess a priority to make sure that we get to a point where we can make our company investment ready to attract those kind of investors, and that will then fund the future research and development and then the commercialization of our product.